Welcome, everybody, to another episode of the AgView Pitch. We're heading into a new week, a new marketing week, the last day of September in this marketing week, and the first few days of October. Harvest is underway, and we are lucky enough today to have with us Brian Splitt. Brian, how's it going?
Doing good, Chris. I just realized I need to move my camera so we can see there we go. Got to get the
There.
full Eagle Globe and
Yeah.
anchor in there for
Yeah.
you.
Well, we got the Marines in the background and even an Army guy back there. We even let the Army guys show their faces too. So
We're all on the same team.
that's right. That's right. So
So how's harvest going? What's up?
it's going good in our world, I guess. I'll give you my report and then I'm going to get yours. But what we're seeing from clients and ourselves is kind of we're hitting the expectations as we thought so far. Beans are a little bit off the pace. I don't know. I think that dry weather we had towards the end I mean, they're still great, but they had the potential, I think, for like unbelievably good. And
Yeah.
they're great. They're not perfect like they could have been. So corn yields are above APH in a lot of areas. Obviously, the pockets that had all the issues, not so much. But in the areas where we did catch that rain, I think the rain was enough all the way through the growing season towards the end, even to get the corn to kind of get what we needed out of that crop. What are you hearing from your guys?
I mean, we hear a lot. We deal with people in a lot of different areas, but I would say, in Iowa, for example, Western Iowa bean yields have been pretty good. Some areas a little further east, the concern has been just a little bit less than expected, maybe closer to the last year or two. Same thing you said, the potential is really there, but the August finish didn't allow it to reach its full potential. I've heard some insanely large bean yields in parts of like Missouri and Arkansas. You know, yield monitor touching 100 type bean yields there. Not field averages, but just some of those plants are making some really big yield. One of the areas of concern has been Ohio. If you look at a drought monitor map, that especially that southeast pocket is really where that dryness, that drought started. It's expanded a little bit northwest, but if you're in the northwest part of the state, yields have actually been really good. They were fortunate to get some timely rains, and so their corn and soybeans have been looking very good. But again, as you move south and east, it's a little bit of a different story. Not quite as much production in Ohio when you look at that southeast pocket, so it's not a high agricultural production area. But again, that's kind of where the epicenter of the drought was, and it has grown northwest into some of the more higher production areas. Um, we've got one of the individuals that you talked to, and one of the other co-founders of the company, Matt. I'm not going to disclose his yield information. That's personal stuff, right? But he's been extremely happy on both corn and soybean yields that he's seen so far. So,
Yeah, he's in a
um,
kind of a garden spot there. We've got some clients not too far from him, and they're real quiet. It means it's really good.
yeah.
So
No, it's he's very happy with his crop, and I think overall, the USDA is probably pretty close to where we are for corn. Maybe they could be a smidge too high, and I think some of the concerns that we just don't know yet, but people are kind of bringing up is that maybe some of the later planted corn may not yield as good as the early stuff, and so we'll get into that, and see what comes out of it. But if that is true, then maybe as we get a little deeper into harvest, the yield estimates could come down a little bit. And like you said, if there's a crop that's off, and has the potential to be a reasonable amount away from where the USDA resides for their yield, it's probably more of the soybean crop than the corn crop, I would say.
yeah, I think so. Yeah, that's interesting. I think
And it seems like the market's realizing it, not on top of some of the issues that were going on with South America at this point. But
right. And we've seen some relative strength. What's your take? I mean, what are some of the ranges? You're kind of the technical expert um as far as what you watch and see from that perspective. And for the producers that maybe still have bushels that they don't have a space for, a place for, a lot of the beans go off the combine anyway, but I guarantee you a bunch of those still aren't sold probably. And there's also the same with corn. What are some of the ranges you're kind of looking at?
yeah, so I would say that first portion of what you were talking about is probably the most important thing to focus on right now, which is those soybean bushels that you know you want to sell out of the field. We're a little over a month into a rally that's been over $1 off the lows. So from a timing perspective, if you're in the combine and you've got beans that you need to price short term, this is really all you could ask for. So what are we looking at as far as upside targets? I will tell you that from the lows that we had, we built a little bit of what I would call a bull pennant. And so that's where you kind of get a sharp, quick little rally, and then you consolidate. And right, so it might look, I'm trying to look at my camera here. There we go, right where it kind of matches up like that. That's
Mm-hmm.
on the chart. And then when it breaks out of that triangle, then you see the next wave higher. So that bull pennant measures up to the 1090-ish area. Um, it just so happens when you look at some of the other stuff and look at some retracements of some of the bigger picture moves that we've seen, um, the May high to the August low, a 50% retracement is 1092 3/4. From the August highs last year, all the way down to the August lows this year, a 38% retracement would be 1093 3/4. So you have kind of two major retracement levels that basically the same price, about a penny apart. And that lines up with the measurement of this bull pennant. So there's a lot of things kind of lining up right in that area. I'll tell you that the high that we had in late July on the way down on this particular contract was 1086 3/4. You have your 100-day at 1080. So I would say between 1080 and 1090, you should have some orders at your elevator to get some cash beans priced. And maybe we see that early next week. We do have a report coming out, which is the quarterly stock report. So that might give us a little bit of reason to go higher. Another reason I think beans can move higher here in the short term is because there is a head and shoulder bottom in soy meal. And so we actually confirmed that pattern today with meal up. It was up almost limit. There's a $25 a ton limit on soy meal futures, and the October contract is the front month. It finished up 19.5, and that was about $2 off the highs. So, we were what, $3.50 off of the daily limit in soy meal. And that hasn't reached its objective yet. It just broke out of the neckline today. So when I look at the December contract being where the volume and the open interest lies in soy meal, that measures up to about 366, 367. So we took about $10 today above the neckline, and there's about another $20 left to get to the measurement of that pattern. Doesn't necessarily go straight there. A lot of times these will kind of peel back and revisit the neckline. So we hit the 200-day moving average today on the high. So it wouldn't be out of the ordinary to pull back a little bit, maybe revisit the 100-day, revisit the neckline. But that has further upside to hit its upside objective. And there's also a head and shoulder bottom in November 25 soybeans. And I think this is another market where producers should be paying some pretty close attention because um, right now we're pricing in a couple things. There's concerns in Brazil primarily as far as what's the weather market that we're dealing with, and the Brazilian weather is kind of this element of, gosh, if you look at what the weather is right now as we speak, and for the next couple of weeks, it's like 100 degrees every day with no rain, and it's been that way for a while. But their soil's not like ours, where if we get a rain in late fall into winter, have some snowpack here over winter, we're gonna have very good soil profiles come spring. Um, uh, the the soil there's a lot sandier, so it's not like it holds moisture as much. So they could just get a rain, and it's exactly what they need, and then they can go. And this is not a crop that's in the ground that's burning up; it just hasn't been planted yet. So what we're doing is we're potentially delaying the planting of the soybeans in Brazil. So there's some elements of, is it a little early? Yeah, maybe. But I think part of the story here too is we lived this a year ago where it was dry, and it was dry in the same spot it's dry right now, which is Mato Grosso is that main state. They grow about a third of the country's soybeans. And that was a big reason why the crop last year in Brazil didn't reach its full potential, is because of the Mato Grosso losses. And so if you think back to a year ago, it's like, all right, we had these forecasts of rain to come in, and they just didn't come to fruition until about mid-November. So yeah, there's rain in the forecast 2 weeks out, but that's a model for trying to forecast 2 weeks out, and that's really not very accurate. So we'll see if it does rain in mid October and they get the crop planted. Then we're probably going to take a move lower in values, especially with some harvest pressure here domestically at the same time, if that comes to fruition. But if it doesn't, I think they're going to continue to put some risk premium in here. And the other thing too is that it really does affect the safrinha crop. Just as you delay it, every week that goes by does have a possible yield reduction for the safrinha corn crop. So I think that's why corn's kind of reluctantly coming along right now, but it is moving higher. So anyway, back to the Nov 25. Head and shoulder bottom there measures up to 1131 and a half. And the cool thing about that is actually the exact high that we made in the month of July. So when you do the measurement of the pattern and project it forward, that takes you right to 1131 and a half, and that is spot on with the July high. And that was made on July 5th. So one of the things that we're trying to do as a company for our hedge recommendations, these are the official recommendations we put out, and they're meant as a guideline. If you're not a cash marketer this early, or if you're not somebody who wants to sell futures, you can maybe take a look at the percentages we're recommending and do something different that fits your risk profile. But for right now, what we're trying to accomplish is to have about a third of next year's beans priced with an average of a little above $11. So we've already made a sale just below 11. We're going to make another sale just above 11, and then we're shooting for 11 and a quarter on that last 10%. And so the thing with the Brazil, we just went through why it could be friendly. But again, if they get rain and it's timely and they plant in October, and Chris, like 70% of the Brazilian soybean crop is actually planted between like October 10th and November 25th. That's a really big window.
Yeah,
So
it is.
again, it's like we're pretty early to get really excited about this, but we lived it last year, and I think maybe that's why the market's reacting a little bit early.
Mhm.
Um, so again, I think that's an opportunity because if they do have a big crop, even if it's trimmed from some of the early estimates of 170 million tons, 160 million tons would still be 10 million more than roughly where their previous crop was. 165 would be 15 million, and so think about how the size of the Brazilian crop changed the timing of Chinese buying this year, right?
Mhm.
Normally by mid July they've already bought several million tons. By mid July this year, they hadn't bought any. And then when they did start buying, they started buying rather aggressively. But if we have another crop out of Brazil that's 10 to 15 million tons larger than the one they harvested this past winter, what does that do to the timing of Chinese buying? Do they not need to buy then until August or September, right? How does that pan into the whole deal? So I do think that we've got to get some sales on for next year's soybeans. And if the market keeps going higher, then what we're going to do is we're going to layer in some floors with some options on some additional bushels, and those recommendations will be to come moving forward.
Awesome. Yeah, I think the here and now is taken really good. What you're saying is I think if producers got to get something sold off the combine, be watching that the 1080, 1090 range, and I think obviously too managing that basis. I mean, we've kind of like you guys. I mean, we're all over the 22 state range, and the basis is so different everywhere from one area to another. It's crazy how different it is. Um, you
Yeah, the tales of basis in the Eastern Belt versus the Western Belt
know,
are
right?
as old as time. It's amazing how a crop can differ, from one side of the country to the other, and what it does to the cash market.
Yeah, and even locally too, like our local area, we were in that drought zone last year. We've still got a pretty strong basis, even though we got a huge crop coming on because we didn't have the 23 carryover that a lot of other areas are
Right,
dealing with
right.
that 23 carryover as well. I want to hit before we wrap up. I want to hit kind of the same thing you just did with soybeans here. Talk a little bit about what are some of the ranges for corn. I know we got quite a few clients that are going to have excess bushels now that they see how good the yields are in some of these areas. Not so much in others, but these guys who can't hold all of the bushels know they need to price some more yet. What are some of the ranges you're looking for there in the corn?
So corn actually is another market that has a possible head and shoulder bottom. And I'd really like to see the March get above 37.5 on a closing basis to confirm that. But it has the setup. Okay. And these 25 corn also has a head and shoulder bottom, and it closed above its neckline today. But back to March real quick to focus on the crop in the ground right now, or what's being harvested. If we see the March contract reach its objective of the head and shoulder, and again, let me just do the measurement on my chart real quick. That is going to take you about to 463. Now, when we had some lows that were made in February, right, our late winter low on the March contract, that was 459.5. So this kind of says we may actually go back and revisit those lows we made early in the year that we didn't end up taking out until June as we led into the June stocks and acreage report. So that would be, to me, the big picture upside objective. The 200-day moving average is just a little bit above that, and that's going to come down as time goes by. When we look at the nearby December contract, if you look at one of the charts I like is a continuous chart. It always shows the front month contract at any given time. But there's another chart that I like as far as a continuous chart, which only shows that particular month. And so if we look at a December only continuous chart, so what that means, just so the viewers know, all right, so when D's 23 corn expires, now it's plotting D's 24. When D's 24 corn expires, now it's plotting D's 25. So it's only looking at December contracts. Now, there was a series of lows. There was a low that was made in November of 2023. This was the D's 23 contract. That was at 447. Then we had a low in February of this year on this year's December contract at 446. So that 440, call it 445 area, pretty stinking important as far as resistance. When we again look at that February low on its own independent on independent chart, it's 446. And so then, I'm curious, like if I just said, all right, well, what's some retracements from the high that we had in May to the lows in August, right? That move that we saw from spring high to late summer low. 441 is your 50% retracement. Okay. So that lines up pretty close to that. And so then I would just say, out of curiosity, let's go back to last summer. And that was also a June high to these recent lows. And if we go ahead and I just got to get these retracements snapped right to the right spot. My computer's like glitching here. Sorry.
You're good.
All right. So we're essentially looking at about 453 being the 38% retracement of that whole move, and 454.25 is a 62% retracement of that whole of the May to August low. So I kind of look for retracements of different time frames, and are there retracement levels of one move and then another move where the retracement's at the same spot? And I think that could be kind of a magnet. And the 200-day on corn's at 453.5. So right now, what it's going to take in order to really get corn to see the funds aggressively cover shorts like we saw in beans this week, we have to get through 426.5. So if there's any short-term bushels that need to be sold, right here, right now, as we get to 420, 425, you might want to take some action there right in front of that, what would be the potential breakout point. But the nice thing about it is that the corn options are trading with volatility at 6-month lows. So it's actually really cheap right now if you wanted to like make a sale because you don't have storage and just, put a call on the, there's parts of an option that you're paying for. There's time value,
Right.
there's volatility value. And so at least that component of the corn options are the lowest they've been in quite some time. And that's just a matter of, if you look at where corn is now and look at where it was 2 months ago, it's at the same price. And the trading ranges, for the most part, have been pretty small. We're not seeing a huge amount of volatility. And so that does offer opportunity where if you want to use some options to back up a cash marketing decision, you can do so without paying a lot for it. Again, they're relatively cheap.
Hmm. Um, we're getting up against time, but I want to ask you this kind of quick question. What are the threats on both corn and soybeans kind of quickly? What are the things you're watching, so that people have the confidence, to pull the trigger on some of these levels that still probably doesn't make them happy, but yet on the same token, there's probably some threats out there too, I would suspect.
Well, I mean, threat number one is that there's an awful lot of bushels that are going to be coming, and so whether we are, trying to figure out, is it, 183, is it 185 on corn,
Right.
is it 54 beans, is it 52? Both are still very large crops, and both will still offer large carryouts with large stocks to use percentages. And we have a quarterly stock report on Monday. So that's
Mhm.
probably your primary risk as far as something that could stifle the rally is you get a number from the USDA that just says, nope, there's more old crop coming in the new crop than we thought. That's always a potential. The USDA has done it before. And sometimes when they do it, I mean, it could be the tune of 100 or 200 million bushels in corn. I wouldn't put that out of the realm of possibility. Again, if you're thinking optimistically and you like the way the charts look and you feel like we may have made a low, which I can't argue with because I like the way they look too. You go back to the option argument, right? I mean,
Mhm.
if you think about, the amount of time a December corn put is exists, right? December corn is here. That option expires November 22nd. It's 56 days. So you almost have 2 months with that option. Um, you could buy a $4 put, and I'm not. This is not a recommendation. I'm just telling you what it costs.
Mhm.
4 5/8 of a cent, right?
Yep.
You could buy a 410 put for 8 cents. Um, you know, I mean, you could basically, take the 4 3/4 cents that the market was up today and say, all right, I'm going to use that 4 3/4 cents to buy a $4 put and have a worst case
Have a
scenario for the
forward.
next 2 months while you're, seeing what's in your field and again, fingers crossed. Hopefully, this market continues to move higher. But that $4 put was trading over 20 cents a month ago.
Mhm. Yeah. Interestingly enough, some of the clients, and I'm sure you have those too that have a really crappy crop. They're the ones hoping the market goes down, or some of them are anyway, from an insurance standpoint.
Yeah, even
But
guys that
October is
have a
going to
really
be
big crop were
yeah,
hoping the market was going to keep going down. So
yeah,
because I
it's
think we
tough.
all realize too that if it overdoes it to the downside and it did it in a period where the crop insurance was going to be able to pay out from it, that the market would still find a low and then go back up afterwards. And
Hmm.
so the timing of it would have been really nice if the market would have stayed kind of crappy here for another few weeks at least into mid-October to kind of get the average set in the month at a lower value, but that's not the case. I'm not going to be mad the market's going up. I know a lot of people want that and need that, so I'm happy it's going
Right.
higher, especially beans again, because like you said, I think there's a lot of individuals that are planning on selling beans out of the field. And so this move right now that we're getting is just fantastic for the opportunity to do that.
Hmm. For sure. Well, hey, I think this has been a great conversation. As usual, you're kind of the tech expert. You're the one that kind of can kind of tell us, give us those ranges, just give us some perspective. I would suggest that, if anybody, with agmarket.net, you guys are, in my mind, at the top of understanding things and helping people. What's the best way if somebody wants to get a hold of you, Brian, to kind of talk about getting some perspective on some of this stuff? What's the best way to reach you?
Yeah, you can reach me directly at 815-665-0463. We do have a pretty extensive team that covers a lot of ground geographically. So if you want to try and find somebody that's close to you and somebody that you might be able to meet face to face, just go online at www.agmarket.net and you can look through the personnel. And, if you have questions from one of the partners where you want some guidance, we're all here to help you.
Yeah, you guys do a great job. And as usual, Brian, really, again, really super appreciate your content. This is the time of year where this stuff's super important too, especially when guys are having to make some decisions. It's not ideal or not the ones they want to make, but getting that perspective, I think, just kind of gives everybody some solace in the back of their mind that okay, this is all right for this percentage of sales and kind of managing the business. So with that
Yeah.
said.
Yeah, and by no means does this, any of this conversation mean, don't sell any corn until March gets to 460 or
Right.
whatever. I it's just, I think it's a constant process of like evaluating what your risk is and trying to make sure that there's some coverage there, but still allowing you the potential to be happy if it goes up, right? No one wants to be fully hedged and in the futures and the market's taken off, but their basis isn't reacting and now they're eating it in the futures account and in the cash market. So it's about kind of finding the right way to be covered at certain times of year as part of it too. So by no means would I say, well, corn's going to 460, so don't sell a bushel. I don't think like that.
Right. Well, and I think you hit the nail on the head. The key is having a conversation one on one because everybody's situation is unique. And if you guys can understand the situation, then it's a lot easier to kind of talk more specific perspective, right, with what the
Well,
situation
you
is.
live that yourself, Chris. I mean, you deal
Right.
with a lot of producers in a lot of different parts of the country, and they all deal with their specific challenges, right? So
Right. Yep. We're all kind of different in those areas. So hey, Brian, really appreciate your expertise and your information and everything again. And we'll get you back again here real soon and we'll pick your brain again.
sounds good, Chris. Be safe out there.
Yeah, we'll do. And everybody, thanks a lot for listening. We'll catch you again next time on the AgView Pitch.